Assalamualikum OyaRahmatullahe OyaBarakatuhu. Innal hamdanillah wassalatu wassalamu ala rasulillah. Amma ba'd. Bismillahirrahmanirrahim. This is Muhammad Kamrul Hussain, Department of Business Administration, Metropolitan University, Sylhet. Welcome to my virtual classroom, MKA CLASSROOM. Now let's start today's video tutorial. Today we will try to discuss types of investor. Investors may be individuals or institutions. Individual investors are large in numbers, but their investable resources are comparatively smaller. So here is two types of investors. One is individual, another is institutional. Individual investors are large in number, but they have less resources than institutions. They generally lack the skill to carry out the extensive evaluations and analysis before investing. So it is clear that individual investors are they have the lack of skills compared with the institutional investors. Institutional investors, on the other hand, are the organizations with surplus funds who engage in investment activities, mutual fund, investment companies, banking and non-banking companies, insurance companies, etc. are organizations with the large amount of surplus funds to be invested in various profitable avenues. So here basically we try to discuss the two types of investors. One is institutional and another is individual investors. Now we will see the another way of types of investor. Here we will see an article entitled 6 types of investor, which one are you, by the Interest Group. That is our reference, Interested Group. So here we will see the another types of investors. Here we will see two categories of investors, active and passive. Two categories of investors, active and passive. Active investors have often achieved their own wealth. Entrepreneur, business owners, surrogans, as well as lawyers, accountants who run their own firms, and semi-employed people are often active investors. They like to be in control of their investment as they are in control of their professional lives. They want to actively involve in investment choice and financial affairs in general. Passive investor. Passive investors are people who gained their wealth by inheriting it or by entering into a remunerative professional career. That means they are in the job. Examples include physicians, corporate executives, and lawyers and accountants who work in the large firm. They are the passive investors. They often started out with student debt or a lawyer salary and worked their way up. As a result, they prefer security over risks when choosing investments. They achieve this through diversified portfolios invested in established and brand name companies and funds. Now here we will see two types of investors. One is active, another is passive. So here we see two types of investor. One is active, another is passive investor. Now we will see another categories of investor that we have to know. Here we are seeing 6 types of investor and some related personality characteristics. So here we will see 6 types of investors. With those broad categories, researchers have identified several investors types. BG investors. First one is BG investors. Those who are BG, the BG investors are interested, some might say obsessed with the markets. They follow the ups and downs of equity, gold, real estate prices. As a result, they tend to buy and sell frequently, often based on what they see others doing. They are the busy investors, those who are busy to make their profit. They are the busy investors. Number 1. Number 2, casual investors. The casual investors are opposite of busy investors. Once an investment is made, they tend to let it ride, believing that it will take care of itself. They are the casual investors. They invest fast and they don't take care of their investment. They think it will care itself. That's the casual investors. After that, we will see cautious investors. Cautious investors. The cautious investors tend to be most risk averse, putting financial security first. They take their time when they faced with decisions, performing to weigh all of options before choosing. Afraid of making mistakes, their pursuit of perfect decisions can mean making no decisions at all. So they are the cautious investors. They look after all the matters in the market and try to avoid all types of risks. Then number 4, another types of investors, emotional investors. Emotional investors. Emotional investors. The emotional investors put their heart into their investment decisions, know their head. For example, they are likely to invest in companies because they use and like the firm's products, regardless of a stock's performance. To hold on to real property in a dispersed neighborhood of sentimental reasons. That is the emotional investor. Later on, we will see informed investor. These informed investors tend to take a well-rounded approach. They are careful to stay up to date using variety of sources to fill their understanding, while confident of their own financial acumen. They also are willing to listen the advice of experts and to act decisively. Often high achieves in their professional lives. They typically have a strong work ethic and may seek the same sense of control and accomplishment in their investment. And last one, technical investors. The technical investors share some characteristics with base investors, but they tend to analyze the numbers and read the pundits rather than reacting to every market move. They may spend a lot of time to their computer screens, but feel that their diligence is rewarded if they spot a trend too earlier than others. They are the technical investors. They make their decisions technically. That's the technical investors. Now here we see busy investor, casual investor, cautious investor, emotional investor, and informed and technical investor. These are the 6 types of investors here we learned. And basically a student of finance, you know there are 3 types of investors in the sense of risk taking investor, risk averse investors, and risk neutral investor. You know it very well that risk seeking investor, that means that they are like to take risks. Risk averse investors, those who do not like to take risks, they always try to avoid risks. For this reason, so they want more return with the more risks. Another is risk neutral investors. Risk neutral investor, that means what? If price goes up or down, not a problem. They want to like these matters. They want to stay in their return, not a problem. They only prefer the required rate of return, not the risks. But here risk seeking, they prefer risks rather than return. Risk averse investor, they prefer return rather than risks. Also risk neutral, they prefer return rather than risks. But here risk averse investors, they prefer return as well as if risk increases, their required rate of return also increases. Here is the another 3 types of investor. 1, 2, 3. You know it very well. Risk seeking, risk averse, and risk neutral investor. Thank you very much. This all about today. Stay home, stay safe, try to maintain a safe social distance, try to wash your hands frequently in a day. Subhanaka Allahumma wa bihamdika ashhadu an la ilaha illa anta astaghfiruka wa atubu ilaika. Assalamualaikum warahmatullahi wabarakatuhu.